What's going on, everybody? This is your host, Chris Noggle, and welcome back to the Real Estate Money School. I'm very pumped up about today's topic. Today's topic is self-storage with the master of disaster, AJ Osborne. Self-Storage Income is the name of his podcast. He's got a book. We're going to dive into that in just a second because I'm sure you all want to know about self-storage, but you also need to know about his journey that he went on to get to where he's at today. That's always the important part. You can never just focus on someone's successes. You got to know what was that journey like and how did it happen? I know that's what I like, and I know all of you love that. You've already told me, but let's talk about you for a second. On your journey to becoming a rebel banker, you all have to do some things. Number one, you have to get educated. Number two, you have to take that education and you have to leap and take action on it. Getting educated, reading books, going to school, none of that is worth anything. It's the reason many of you, when you took a foreign language, you can't speak that language today. You didn't apply the knowledge. Well, everything you're going to learn on today's podcast is going to require you to take some form of action and some type of application of that knowledge for you to actually do something with this. So let's start with some of that action. How about grabbing a copy of one of my books? The Private Money Guide, you can grab that one. Or Mapping Out the Millionaire Mystery, teaching you all about how the millionaires and the billionaires use and move money and how they do it while they're in control. How about I give them both to you for free? So in the show notes, there's going to be a link. It's moneyschoolrei.com/book or /new book. And you can grab a copy of either one of my books for free. And the biggest thing I ask is don't just read it. Read it and do something about it and take action. So let's jump right in. AJ, thanks for joining us.
Thanks for having me on. I appreciate it.
Absolutely. This is a great topic. It's one I love. I drive by self-storage facilities here every day, and I always think, those guys are just printing money. So we're going to talk a little bit about that today. But real quick, AJ, you've got, on your Instagram is fantastic. So many things you do, but tell everybody about your business, what it looks like today, and what you're excited about.
Yeah, we have over 100 million in assets, and that was all just me and my partner. We just started getting into more of syndication type where we actually allow investors in. This has, been kind of new for us in that world because our strategy has always been we found really underperforming assets and turning them around quickly and then redeploying that capital as fast as we could. And that was a strategy that has worked exceptionally well. And we actually, I didn't ever really get into real estate. So that's not ever what I started in. I started in insurance. I was an insurance salesman. So, really real estate came as diversification through that type of revenue, type of income. And so when we were looking at real estate assets and when we were looking at where we should go, because I knew that I needed something that was reoccurring that could be separate from my time. And I also knew that I needed something that could be repeatable because I was going after compounding. So I wanted to compound. And one of the problems that I had in a lot of real estate asset classes, I didn't like the overall returns nor the upsides that it was provided, which could really hamper my ability to get to my goals as quick as I wanted to. So with that said, we started looking at different types of assets and what we could do. And I had this theory or this philosophy in the early 2000s that self-storage is not a real estate asset class. It's a business. And there's a lot of people out there, particularly mom and pops. I mean, when we got started, it was 86, 90% of the entire industry was one operator owner, and it was by mom and pops. That's changed, but it's still like 73, 4%. And in apartment buildings, it's like 20. And so I realized that most of these people, they built them. They were either older assets or whatnot, but they built them with one simple and sole purpose. I just don't really want to do anything. And
that's kind of what I look at it. I'm like, that's a great business because you really don't have those phone calls saying that, there's brown things floating around in water in the basement. Can you send somebody over? Oh, I know it's Easter.
Yes. No, we don't get those calls. And so, it's one of those businesses that, real estate investors actually look kind of down on. When I started, it was not something that I bragged about, that I was in self-storage when we started. There was no hype around it. It was a junkyard industry. People ignored it. So when people were going and buying apartment buildings at 5 caps, I was going in and telling somebody that was trying to sell a storage facility at a 10 cap for me that they were smoking dope, and I'd take it at a 12, but nothing under. And that's how I got started. And it seems crazy that we even have those conversations today, that the industry used to be like that. But it's even more crazy when you look at, we were buying these assets from mom and pop investors that weren't doing anything. We did rate management. We started implementing revenue management, marketing, and running it like a business. So we're like, okay, listen, there's a proper way to run this. And this asset offers some great things, which a lot of people thought were downsides. People are like, this is an extremely risky asset. They go, the general population, if they're using it, they're not going to use it. It's like someday everybody's going to wake up and realize this is dumb and let's stop storing stuff, which I didn't ever believe that, because the economics don't support that theory at all. And that's
actually the opposite.
It's the opposite. Exactly. Real estate prices rise and our ability to purchase and consume is dropping and has been like a rock. And so your ability to hold as much as we can consume has shrunk. Businesses are downsizing. Office spaces, downsizing. People work from home. The internet has just dispersed a lot of these very centric business models that were focused on certain channels of distribution, that made it so, there was a centralized way to buy, consume, and do everything. That's completely been broken down. And people are like, well, Amazon's the number one. Yeah, but Amazon is not the seller. Right? The sellers, the buyers, the makers, these are individual businesses all over the place. They use the Amazon platform. So also, which I own several Amazon businesses. So when you look at it, now you have all these businesses that they don't want corporate offices. They need a place to house products. They need inventory management, and warehouse spacing is astronomically expensive. I mean, if you're looking at doing industrial spacing right now in most locations in America, it's crazy. And so the ability for individuals to actually get space, those trends were only going to continue to be harder. And we see that in America. Renters going up, home ownership's going down, office space is being less utilized, retail's gone. But, a lot of people don't come to realize that yet. It's shocking that we're still having that conversation, but retail's gone. We've lost 4 major ones in the last 3 weeks alone, which we buy up. We buy up big box stores and convert them. So when we started looking at all these things, it was clearly to us, it was obvious that this was going to be an industry where demand was not going anywhere. In fact, demand was only going to rise. And it had nothing to do with the fact that Americans were greedy. In fact, we knew that this is going to go all over the world, and the need for climate controlled operations based. We have a conference room in one of them. There's so many more needs than, it's just all those theories when self-storage were just kind of been obliterated now. But that's not how it started. And it didn't happen until after 2008 that everybody said, actually, this is really cool. And that was a big change for our industry, that people actually wanted to be in it, right? That people thought it was a cool asset. They thought it was cool because they started looking when all their real estate was failing, and we were not only doing okay, we were buying, and we were buying lots because we had plenty of money. And our performances were, I've never seen a storage that was run by anybody that knows anything and was stabilized. So it wasn't developed, it wasn't risky, fell. I've never even seen it. So it was one of those things that I think people, all of a sudden after 2008, that really woke people up. People were like, these golden cows in real estate that we have, that we all worship, retail, which retail bonds were the equivalent of like T-bills in the United States. I mean, it was stupid. They thought that they would just never stop and that they were the least risky thing in the world. And housing, which those two things were the cream of the crop. Like those were the things that could not ever fail. It was impossible. And they were the first to go. And so it, turned everybody kind of upside down in their thinking. And that really pushed people to 2 separate avenues. They said, we need to look at alternative assets. So you have mobile homes, self-storage, and apartments. And the competition for apartment buildings, I think I'm a smart guy, right? I got 100 million in assets. and I'm not going into apartments because I don't think I can compete. So if I can't compete, how's the individual guy go in there and compete with all these funds and all these institutions to buy a 60-unit apartment complex? You do it by not making money. That's
exactly.
how you do it.
I was getting ready to pounce on that, but that's the only way you're doing it right now, is kidding yourself, coming up with some so far-fetched pro forma to support your numbers at these cap rates that don't make a lick of sense.
No,
but you're just
none.
like, oh, it's only going to keep going up in value, and I'm going to have this appreciation because some guru told me that multifamily is where I should be. No disrespect to the multifamily guys. I have a lot of them on my podcast, and some of them are killing it, but I'm right there with you. The average guy that's going to go out there and try to buy a multifamily, and when I say multi, I don't mean a 2 or a 4 unit. I'm talking a 60, 100 unit. You are fighting an uphill battle against some major big players. It'd be like you swimming in the ocean when sharks, bad sharks, are migrating, and you just decide you're going to swim out and play with the sharks. You probably will get bit, if not eaten alive. So that's what's going to happen if you jump into this space.
100%.
I just don't understand the logic behind it. But
6 months ago, Grant Cardone stood up on stage and said, you don't need to make money in multifamily.
I heard that. That was crazy.
He literally said, I'll buy anything and it doesn't even need to make money. And I look at that and I go, wow, we're back in 2004 or 5 with housing.
Yes.
And so all of a sudden this leaves us with very little assets, which I'm not going to go buy a storage facility unless I'm not making money. Like, that's stupid.
I buy nothing over 4 units, nothing. For that exact same reason, I've run the numbers in nauseating detail. I can't make sense of it, man. I can't make sense of it in any way, shape, or form. I'd rather own a bunch of single-family house rentals because at least that I can make sense of. It's a pain in the butt, but I can make sense of it. So no, we're of the same exact school of thought. I'm glad you brought it up about Grant Cardone because now that it's public and now we got it out there, now it's just let's watch that because I really want to kind of see that thing. And he laid off half the staff a month ago,
and I think he's a great guy. I think he's preaching the choir, he's telling people things that they should be doing. That's fine, but whenever we start smelling our own crap and saying this smells good, you're in trouble. And this happens to all of us. I don't care if you're Grant Cardone. I don't care if you're me. The moment it stops making money, and I'm telling people to get in because it's advantageous for you to put money with me or to buy my crap, whether you make money or not, that's when things go south.
Yeah, I want to say something, but I'm not going to on how he's making money on that without making money on the actual assets. But there's a way he's doing it, and it's not just the fun.
So he buys the assets. Yeah, he buys the assets, right? As they appreciate, he off-shifts the risk to investors. So you're buying assets that he owns.
Through his own funds.
His own funds. He's taking his own chips off the table, putting the liability on you. He owns equity, which he has no recourse on at all. And yet he still owns, and you have to pay him now to own an asset that he already owned. So it's a risk shift, and he has some of the highest fees and everything in the market, which he can do that. Mm-hmm. So good for him. He's a capitalist, right? But that is not a winning strategy for any normal people. So Grant Cardone can do that, and that's awesome. He gets paid tons of fees because people like him and they want to invest with him, right? If anybody would like to do that with me, by all means, get a hold of me. I don't have anything available like that, but it's like if you're going to throw money. So I'm all for him doing it because he should be able to, right? But if you're looking at starting out in real estate investing, cash flow is king. I don't care who you are. Real estate does not provide freedom. The cash flow that real estate provides freedom. And so if you get it drowned out in fees, and if you're buying at 4 caps and you're literally just waiting for a hiccup, you don't even need a downturn. You just need a hiccup. And that is scary to me. And so I never liked that. And I don't like that investing strategy. For me, I'm like, I need to see numbers. I need to see cash flow. I need to see low risk. And when things go south, how am I going to fix this? So for me, self-storage offered levers that no other asset class offered. It gave me control to run my revenue in that business. And that's what I loved about it. So I can buy an asset and I can, without doing any major CapEx, within 6 months, I can increase that asset's revenue by 30+%. And we do this time and time again. And when I look at it, all it took was it took hard work, right? And we had to learn. I had to build systems, and it's nothing. I'm not saying this is easy. There's nothing easy about real estate investing in any asset class. That's a joke. But I think I personally believe that real estate offers the average person, or self-storage offers the average person the best access to commercial real estate than any other asset class. I love mobile home parks, but banks don't.
No,
and
they do
really
not.
hard
They
to
do
finance.
not. And we're going to get into the money side. I want to real quick just stop you because, prior to having any guest on, I do probably more research than most would. And I went to your Instagram, and you have this video up here. Okay, your video of you with this self-storage, key lock storage, where you bought it and you put this beautiful, like modern looking front facade on this place, and the inside looks just as nice as the out. And then somebody's going to look at that and say, well, why would you invest all this money in this beautiful front thing? But you know what? It makes all the sense in the world. Like what you're doing, where you're actually making them, what I just wrote down, operation based, where you got conference rooms. Now people can come to your facilities. They can bring clients to your facilities. They got all the storage in the back, which is their goods and services that they're running through their online businesses that they don't have an office, they don't have a retail space for. And now it looks professional. They come in, they've got a conference room, they do their meetings, boom, done. Off to the beach or whatever they want to do. That's genius.
Well, and you have to understand that real estate investors get in this idea that, oh, I'm going to meet the market or whatnot. That doesn't exist in self-storage. So if I go to a market and Bob down the road is getting $50 for a 10 by 10, why do I care? I'm going to get 80. And it's not relevant like it is in apartments, right? You could not have a 40% spread in your rates on a 2-bedroom, 1-bathroom apartment that something of similar quality down the road had. Nobody would buy it. That doesn't exist. It's crazy. But with self-storage, it's all demand based. So if there's demand there, not only that, but I can kick people out like that. So I can raise rates rapidly. People can leave. They're putting their stuff on our cement, right? They have any recourse to us to be able to keep their stuff on our property. That doesn't exist. And the courts have backed that up time and time again. You're not living there. You're literally putting stuff on his driveway, basically. And if he wants your stuff off, he can get it off anytime he wants. And so the laws are very favorable to really work the rates. And two, we do something called dynamic pricing. A lot of people know what's on an airline. If you're sitting on an airline and there's 200 people on that plane, there's 200 different prices. Not one person on that plane is paying the same price. The person next to you may have paid $50 and you may pay 500. And when you look at that, there's a reason airlines do this. We do this in storage. We do dynamic pricings. Each unit has its own rate increase, right? Its own pathway. We got them in at their own prices. As demand goes up, we rise. So we may have somebody in a 10 by 10 that's paying $60 and one down 3 doors down that's paying $80. I can maximize this revenue. And when we buy it, I can see what all these revenues are. And I can do simple equations, and I look for the spread. I call this the money on the table. That's all I look for. When I look at an asset, I say, how much money is sitting on the table? Is it worth me buying or not? And I take what's at the top end of what can be charged to the market, the asset, if it validates it or not, because in storage, 64% of all the decision makers when you purchase a storage facility or like a unit. So when you go to buy a unit of storage facility, 64% of all the decision makers are women. Well, a lot of these storage facilities are not nice. They're not in good locations. So if you're sitting here going, storage facility, which our tagline is, we are an extension of your home, because we are. And if you go look at a storage facility and you got this unit that you're going to rent and it's, not that great, you're a little nervous, maybe it's not in a good part of town, and they're charging $50. And I go over to like the video that you showed, a nice new office place, right? And they're charging $80 or $90, they don't care. They're like, spend the $30 to be safe in a nice place because I'm putting my valuables here.
My wife wouldn't care. She'd be like, we are not renting that one. You're going to pay for this one. Okay, then, honey.
Exactly. And so when you look at rent, though, when you're talking $1,500, a 10% increase is $150. Yeah. If I give a 10% increase on my gross revenue, that makes a significant difference, especially on a cap rate. Mm-hmm. But to the individual person, you're literally talking like $5. Nobody cares. It's just insignificant to them, yet to the owner, it makes a massive difference. And then we add in insurance, we add in products, all these things that they're not doing. And we can really increase that value very, very quickly. We refinance, go non-recourse, take our money and do it again. And that's our entire strategy. And in self-storage, once again, you have these levers through pricing, revenue management, controlling expenses, and then adding products, services, insurance that you can do to increase your long-term value of that customer. So how much your average customer is worth to you. We can always be adjusting it and always be increasing it, right? There's only so much you can do with living space because those rates are fairly defined. Mm-hmm. And two, laws dictate most states
more now than ever.
Exactly.
You can't even evict your tenants now. You get somebody that's not paying you. You're like, hey, your stuff's going to be out at the front. You come get it. And the other thing too, like the building, like I've looked at these, but this is a photo of another one of your facilities, like the building, like, when you build an apartment building, there's a lot of costs. There's a lot of little details, a lot of little things. When you build a storage facility, sure, it's got to look nice from the front, but really it's 4 walls, a concrete pad, and an air conditioner. I mean, there's not granite countertops. You don't have specialty lighting that dims. You don't have USB plug. Well, maybe
there's
you put
no
USB
plumbing.
Plugs.
There's no plumbing.
That's very expensive.
No electricity. There's no nothing like that. And the vast majority of all our units don't have air conditioning, don't have anything. You just pull up, lift up a door, and that's where it's at.
So it's a whole bunch of mini garages.
Yeah, exactly. And we cater. So this is another thing I love about storage. If you look at one of my facilities, I may have 10 different size of units. Every one of those is a different customer. Every one of those is different supply and demand. So I have 10 different products I'm selling just on the sizes. So I can go and find out, all right, I'm going to do climate controlled. We're actually going to air condition. That's going to be paid double. Non-climate controlled, the back of the facility, they're worth this much. We're now taking in drive-in pull-up units to RVs, which I'm targeting markets for people that own RVs that are over $50,000. And if you own a $250,000 RV, you don't care about $250 to make sure that $250,000 or $500,000 RV is safe. You're going to pay it. It's insignificant in the cost. And so we can target certain demographics and customers. So I can go into an area and I can build a storage facility that I'm not even competing with the competitors around it. I can't build living space and not compete with other people that have living space. So we do this all the time. If I go into an area and there's no climate controlled, I build a climate controlled facility. Nobody else has it. I'm the only one in that market that can offer that. We have wine storage, record storage, on and on and on. And people are happy to pay premiums for that. And so it's so diverse in what I can do with it, right? And so I love that aspect about it, right? We have one size that we're dealing with now, that we have too many large units in it. We're going to start splitting up and moving walls, and then they're going to be smaller units. There's higher demand for that. Then I'll fill it up. The cost of doing that is fairly small.
Oh my God, it's so low. Just build a wall.
Exactly. It is.
I mean, I've been fascinated by this model for a long time. I'm like sitting here listening, just being pissed off that I didn't do more of this, but hey, we all get taken down our own path.
Well, and it's not that everything's rosy, right? I don't want to say that. I don't want to say that, a lot of people say, oh, this is the perfect investment. Right? That doesn't even exist.
There's no such thing.
There's no such thing. And a lot of people say that, self-storage is recession proof. That is totally not true. Because nothing is recession proof, right? It just hasn't hit you yet. Right. So there's a recession in everything. But overall, compared to the rest of the assets, yes, the economics are very, very different. The low cost is very, very different. As long as you're buying right and running it right, there's very low risk. Now, what is the bad side about self-storage? I'm more than happy to talk about this because we see it today.
Let's talk about it.
The bad side about self-storage is self-storage. So self-storage gets overbuilt. Too many people get excited about it. They go in and they build lots of storage facilities.
It's the case here.
Exactly. Where are you out of?
Buffalo, New York. So we got
what
is it, Bob's, Uncle Bob's or whatever
Uncle
that
Bob's,
is?
Yep,
everywhere.
Bob's,
oh my
Publix.
Gosh. Publix, yep. We got those. There's self-storage everywhere. And then, there's a lot of like these new ones popping up, which you can tell are the mom and pops because they're not fancy. They don't have the buildings like that. It's just this little shack, a gate, and then a whole bunch of those people units, which, hey, all good and done. But I don't know. I mean, it doesn't cater to those specialty people.
And so if you're getting into self-storage, like I like to think about it this, the number one thing before I go do anything in any market is I validate, confirm, and reconfirm and revalidate demand. because that's the one thing that will kill you. Overbuilt markets, and I don't care what asset class you're in. This is true for all of them, right? If 10 apartment builders go to some small town and they all build apartment buildings and nobody's there to fill them, they're all going to go under. Like but once again, keep self-storage simple. It's a simple product. Just keep it simple. Don't complicate things. If it's overbuilt, don't go there. Like, don't. If you go to the facilities and those facility managers are like, yeah, I've got a bunch of units. Which do you want? And if you're in a city and you go to all the managers and the managers are like, I'm not even going to put you on a waiting list because I'm never going to call you. I've never not been full and I've never had a unit even come available. Then you say, okay, this is the market to be in, right? And so what you need to do is you need to quantify current existing demand, but then you need to talk to planning and zoning. And you need to understand the potential demand, what's coming, what inventory's ready to hit the market. Real estate has long tails. And too often we don't see the end of that dog. And by the time you grab that tail, that dog turns around and he's ready to bite. And so I've seen people go into markets not even understanding that they were building huge facilities all around there. And by the time those facilities came up, they started lowering prices because their market was overbuilt. So it's not just today's demand. You need to understand future demand. You need to talk to planning and zoning, what projects are in the pipeline, what areas can be built and what can't be built, what's it zoned for, what's being approved, so you understand what's coming down the pipe.
That's some good advice right there. I know this area, I mean, I would have to say this isn't a good area. We've done that. So this office facility that I'm in, we have 8,000 square feet here. I used to rent offices to businesses that were kind of like almost like a starter office, right? Now, with COVID, you think that's working so well? No. So what did I start doing? All my storage is now stored here. All my staging equipment for our flips is all here. Then I started thinking, well, why rent offices when I can just rent storage? So I started trying that, but we called around all the competitors and the pricing was so ridiculous. I mean, they're renting big units. Like we have 10 by 20s and 10 by 10s and 10 by 14s here. They're getting $150. And, I'll probably end up doing that here. I just haven't pulled the trigger. But then like in a market where the pricing is that low, like you got to believe there's too much competition.
Well, and to it, building costs the way they are today. And so I like to think about self-storage is if you get a few things right, everything else will go fine. So it's not rocket science. And if you try to make it rocket science, that is very concerning. So if you're trying to justify why you'll be successful, now you're just being like the apartment builders that are justifying a 3 cap or a 2 cap and not including all the capital expenditures that are needed because they're trying to put it off so their P&Ls look better. And it's like, that you just can't play those games. So if the investment makes sense, it makes sense. And there's plenty of markets where it does. So you don't need to be like married to a market, right? Be married to making money. That's all you got to worry about. And so if you go in and you find a place that has high demand, you can get an asset that has good upside. You have either you're going to run it or you have someone and you know the basics on running it. You know what you should do, right? And hey, I need to be marketing. I need to make sure that I'm raising rates. I need to be doing all these things. It's a great investment. It's awesome.
Just got to run it like a business.
Exactly.
I think a lot of people want to dive into this and they just want to kind of be like they want to have a business, but they don't want to run the business. They just sort of want to open the doors and call it. Like you were saying, the mom and pops, they open a self-storage because they don't want to do anything. Like, well, yes, it's a business and you got to run it like a business. And there's a lot of things that people like yourself and, the Bobs of the world are doing that are you're not going to compete with if you just decide you're going to open up a bunch of storage and then just put an employee in there that gets paid what is minimum wage now, gets paid minimum wage, and all of a sudden you're going to be just cranking cash out. You're probably going to be always wondering why you're not fully occupied is what's going to happen.
Exactly. And that's the second thing about self-storage that you need to look, we're competitive. Like you better believe when I'm in my storage facility, I'm competing. I'm out there trying to get customers and I'm trying to make sure you don't see them. So my competitors, I don't ever want them to see the people that want the units. And I spend a lot of money to make sure that happens. So I look into, the second thing is look in areas where you can compete. When I got started, I went to a little city on the border of Idaho and Canada. I say this a lot, but it's true. There's literally more grizzly bears there than there are people. It's just in the middle of nowhere. And that's where we bought our first facility because I'm like, I guess I can compete here because all I got to do is answer the phone and I'm going to be successful, right? I didn't go to places like LA, Seattle, where I'm going up against 7 REITs and I don't know what I'm doing, right? So now I do that now. I'm totally comfortable doing that now. But when I started out, I wasn't. So I just went to markets that had high demand and that I could compete in, right? So once again, very simple business logic. And it goes a long ways and you can be very, very successful. Another reason why you're successful, though, is there's been a transition in self-storage, right? So we are in our teenage years. Self-storage is the newest real estate asset class out there. It really gained steam in the 80s and 90s. It was developed in the 70s. But even in the 90s, most Americans didn't know anything about storage, right? They didn't use it. They didn't even know what it was. And so now, after 2008, it's become mainstream. You have TV shows that are extremely popular about self-storage. You have everybody's talking about it. Everybody wants education. Everybody wants to buy it. So back in the 90s and things when these people were building them, the exit strategy wasn't very good, right? Because you got to sell them to guys like me when I was buying them at 12 caps. So there wasn't this idea that I'm going to get this huge appreciation and everything. It was all cash flow based, right? All of it. And then maybe in the future, we'll just tear down the units and build an apartment building or something more valuable. It was a land hold. And so you have a lot of these people that own them, and that was their total mentality getting into it, right? It was, I built the thing for $1 million. It's worth $7 million now. I don't do anything with it. I don't have debt on it. It just sends a check, and this is great, right? So I come in, and I'm going to buy it. I'm going to pay a lot of money for it. I'm going to operate it. And I'm going to bring it up to standards and get the rental rate growth and everything. But I'm not buying them for 12 caps anymore. That doesn't exist. That's gone, especially in an era of cheap money. When you can borrow at nothing like we can, any assets, even alternative assets, the cap rates are dropping. So you need to be careful. In self-storage, third tier, right? Second, third tier, fourth tier markets are not the same as first tier markets. You can't go buy things for cap rates like you do in first tier markets because it's a risk, right? So you got to actually go in, you got to do it. So find markets that you can, first of all, that you can make sure there's a lot of demand. Second, find markets that you feel comfortable in competing with, that you know what you're doing, which doesn't have to be a lot. Don't make it complicated. And then the third thing that you really, once again, you really need to focus on is buying right, making sure that it's in the right location, making sure that the exit strategy is good. I can improve it. I can have a low cap rate. All the fundamentals that you use in any other real estate asset class, right? And if you stick to those things, you can grow a massive portfolio. And there's a lot of runway. Once again, there's lots of mom and pops that are either going to sell or be selling in this industry that other industries don't have. And so I think we have probably 15 years, 20 years, and then we're going to be matching all the other real estate asset classes. We're going to be an adult. We'll be out of our teenage years, right? And we'll be an adult. But we're still in our teenage years. People are still figuring out self-storage. We're trying things. We're doing lots of stuff. And that's where the opportunity lies.
I think it was pretty impressive when you said 73 to 74% of self-storage is still owned by mom and pops. I would have never thought that. I mean, maybe it's just different here because it just seems like they're all these big publics and, like you said, the Bobs. But yeah, you're probably right. Now that I think about it, if I drive to the smaller little towns, the Springvilles and the other little, small towns, they're all smaller facilities. So that's unique. Well, you got to get your head out of those big city mentalities and start looking at the smaller towns because storage is just as valuable there, if not sometimes probably more.
Exactly. And you got to think, I'm in Boise, Idaho. We've been the fastest growing metropolitan area, 8 years, something like that. Our real estate prices exploded. We can't house people because it's growing so fast. The second largest REIT in the world is based just down the road at Salt Lake. We didn't get a REIT until 2 years ago in this market. Not one publicly traded company. Every single self-storage facility in the fastest growing city in America, year over year over year over year, was owned by mom and pops. Every single one. So it's, in this area, you have these large second tier markets, and then a lot of them, the REIT game is low, really low. Even now that we do have REITs here, I think we have 4 or 5 REITs, facilities in our entire metropolitan area. There's got to be hundreds of storage facilities here. And there's only 4, maybe 5 REIT locations. Wow. So there's a lot of inventory, and a lot of inventory in places that people don't even realize.
Crazy. So if people want to learn more about this, and I know you have a book and you have a podcast, like how do people, because like now if they listen to this, they're fired up, because I'm fired up about it. So then you got to start really looking at, okay, well, if I was serious about this, how would I start looking at taking the first steps? What would be your suggestions, and how would people get a hold of you to learn more about this?
So, it's funny because we started our podcast, and I take a very different approach to things in life. I'm very transparent, and I guess I'm not that I'm not competitive. I'm very competitive, but I have no problem people knowing everything we do. So on our podcast, there was no funnel. I wasn't trying to sell. It was just like, here's everything that we do. Here's my case studies. Here's what we're doing, everything. And the podcast just erupted. It exploded. It was actually kind of took me by surprise that there was so much demand for knowledge in the space and nobody was really fulfilling it. So then I wrote the book, which is the largest book in the self-storage market. It's the best-selling self-storage book, and it was a playbook. And that's literally what it was. I just compiled everything and said, here's the playbook. If you want to start out, here's what you need to know. Here's how you figure out what demand is. Here's how you figure out what the value is. That money on the table, how do you find it? Here's how you find it. Here's our case studies. Here's what we bought them for. Here's how we turned them around. So it's just a complete guide playbook from front to back on self-storage. So either one of those, Self-Storage Income is the podcast. It's also the website. But the book is The Investor's Guide to Growing Wealth in Self-Storage. It's blue. There's two of them. We didn't even realize there was another one with a very similar title. But yeah, this one's blue, AJ Osborne. And then my Instagram, AJ Osborne or Self-Storage Income. You can go to either one of those. But we go through, I'm about to do a video this afternoon. We're buying an office building in a downtown location. I'm turning it all into a storage facility. I have 3 bankrupt Super Kmarts, 1 Toys R Us under contract. We're closing on another one that we bought, 100,000 square feet, that I'm just turning around. It's running. It's great. I'll put 0 capital expenditures in it. I'll get 20% cash on cash return for the first 2 years. Then 150 will refi out and be done, have all our money out. And I walk through everything. Show you, this is how I found it. Off-market deal. Nobody even knew about it. And so, yeah, I'm very transparent. This is exciting. It's not like apartments. I'm not competing over 10% of the market, right? So I don't worry about it.
I love it.
It may change, but.
So you guys got to grab that playbook. That's awesome. But think too, the opportunity to get, in these markets to get these things. How many Kmarts are there left? How many, all these big box stores? I could go straight down the line. I'm thinking of them all. None of them. I'm
Sears, Kmart, on and on.
Sears is gone here. All of them.
All of them. They're empty. They're just sitting empty. Cities don't even know what to do with them. And this has been really hard because this is a little more, I'd say, of an expert level into self-storage, because you're transferring an asset class that is valued in one way and you're trying to value it completely different. Mm-hmm. So it's a totally different conversation with the owners, because the owners are like, oh, it's worth 15 million. And I'm like, I'll pay you 3. And that's a hard conversation to have. Yes. Because they go, oh, but when Kmart's in it, it's worth 15. And I'm like,
Kmart's not coming back. Walmart's not looking for a whole bunch of new giant spaces either. Walmart's probably, I was just going to say, Walmart's closing locations, and that's not going to slow down.
There's not a company in the world that wants 100,000 square feet. They don't want it. There's nothing to do with it. And 2, nobody's paying 15 million for it. So it takes a long time. And a lot of the ones that we're buying have been sitting on the market for years. Mm-hmm. We're talking 8 years empty. The retail apocalypse started happening in really 06, right? But after 08, it accelerated, and they're still now just coming to grips with the new value and the new asset that they own, which it doesn't resemble anything that it used to. So they're offloading them. This comes with complications, though. You've got to underwrite it really well. What are the access points? You got to work with the city. We have to convince the city, right? Which used to be hard. Now, though, to convince a building that's falling over to be a storage facility, they're like, please do anything with it, because nobody's taking it, right? But you've got huge expenses with those kind of things. $1 million roof, you got HVAC, 500,000. You got to do, drive aisle. So ours, we actually put a road through one of our buildings. There's pull-off areas There's doors that open when cars come in. You pull into the buildings and you pull off, you unload your stuff and go do it. So there is more to think about when you're doing them, right? And it's hard, but it's nothing not doable. And two, this trend's only going to continue with the big box stores. It's, people keep saying, they were saying 6 years ago, you got to get them now while you can. There's twice as much as there was 6 years ago in the market. And in the next 6 years, all the leftovers are going to be coming out on the market too. And all these prices are going to be coming down into reality. So once again, this is an industry that has a lot of runway. The economics favor it. While the economics hurt these other typical real estate asset classes, self-storage benefits from it. The same economics that destroy them help self-storage.
Yeah. I love it. So folks, you guys are hearing it right here. Like, this is how you do it. And he's being so transparent. You can just find him. I saw all of his Instagram stuff. I have not yet read the book. I certainly will, but you guys should do that. I mean, this is a great business model. If you're looking for a way to create passive income, this is it. And also too, the other thing we didn't really get into because we were just so caught up is finding money for these facilities. Banks love them. I've gone to my community bank and they're like, oh yeah, do you have one? I'm like, well, no. Oh, well, when you get one, bring it to us. We definitely like that risk. I'm like, oh, all right. So money is very easy.
4 different companies, and I've never had a bank call me and say, hey, could we give you more money? My storage facility company, I get calls all the time. Could you go buy another facility so we can put more money with you?
Yeah, exactly.
And I'm like, you guys wouldn't give us money 10 years ago. So 10 years ago when we won it, the banks were like, self-storage, really?
Oh, where is that in our book?
Yeah,
oh, okay.
We're going to pass. We had banks that would literally, they had just lines. We don't invest in self-storage. And now they're all clamoring to get it. So it's so easy now to finance and to buy storage facilities.
Yeah. So that's a whole nother reason. And we didn't really get into the money. And I know I'm sorry about that. But one thing we're going to do is I'm going to bring AJ back to do a recording for MSTV on this. And we will certainly hit the money aspect and how that has changed. But, thank you so much for joining us on the Real Estate Money School. There's my timer. It was awesome learning about this. I knew it was be exciting. So yeah.
Thanks for having me on. I appreciate it.
Absolutely. Guys, check him out on Instagram. Check him out all over. I mean, just get a copy of his book. Where's the best place to get the book? Is it your website or?
Yeah. If you go to Self-Storage Income, you can click right there and you can get it. That's the best place, or go to Amazon, but
we'll put the link in for Self-Storage Income. And then you guys can just go there, grab the book, support him. Amazon takes a big cut of books. Not that that's a big deal, but just saying, if he's giving you all this knowledge, buy the book from his website. So folks, all of you got some great knowledge here today, and I'm happy to hear that. And on your journey to becoming a rebel banker and a real estate investor, you are going to have to pick your path and take some action. So get off the ground, take action, and go out there and live your perfect day, but put the work in. We'll see you in the next one. Thanks.